Hey everyone, thank you for checking in. So I want to take a quick look at the markets. We'll start here with the SPY. Not surprisingly, market held up a little bit today. I think this is just a small break in the downtrend. We talked about this yesterday. All right, really important to watch in the tech sector. So the S&P is 11 sectors, and as a matter of fact, I am going to just show you the S&P or the SPY ETF fact sheet, ssga.com. That stands for State Street Global Advisors. They're the people that run this thing. But if you go to the holdings, you could see the sectors. You can see the companies. So Microsoft is the biggest. In the S&P 500, there's 500 stocks, and Microsoft is 7.1% of it. Apple's about 5.75. So we look at the big stocks here at Stock Market Jobber. Please subscribe. And we also look at the sectors. Different sectors are in charge at different times, and there's some real interesting stuff going on, and things could potentially set up in various bearish ways in these sectors. The financials could be reversing off of resistance, and then the tech sector and the healthcare sector could be about to break support. So first thing we're going to do is look at the tech sector. That's the biggest sector. It's usually where we start. Now, we had this massive sell-off, and we found support. Where did we find support? Lo and behold, right around this price level here, around 192.50 or so. Why is there support here? Why did this sell-off stop? Markets go lower because there's not enough demand. There's not enough buyers, so the sellers have to push the price lower. If they want to get their orders executed, they have to offer their shares out at a discount because there's just more supply than demand. There's more sellers than there are buyers. So they have to force the price lower. When we get to a support level, the tide turns. All of a sudden, there's enough demand to absorb all of the supplier sellers. There's enough buying interest that the sellers don't need to push the price down anymore. Technical analysis is about understanding supply and demand and psychology. I get really kind of angry when I see all this. Well, I don't know about angry. That's not a good word. But some of the bogus stuff that's out there, like it's like astrology type stuff, like Gann theory, or no one in the institutional world uses that stuff. Anyway, why is there support at this level? Was it just coincidence? Was it just some random thing in the universe? The answer is no. It was a resistance level. A lot of times we get to levels that had been resistance and we find support. Why is that? Well, there's people who sold back here who thought they made the right move, but when the price finally went higher, they regret selling. And they're like, oh, I made a mistake. If I can get my shares back at the same price I sold at, I'm going to buy them back. So when the price finally gets back to their level, if there's enough of these remorseful sellers placing buy orders, it forms support. All right. Now, the most important thing to watch here is Microsoft kind of played out pretty much exactly as we thought. Massive sell-off, but found some support right around the psychologically important $400 level. Psychologically important means like, hey, why is it like that 400 is important? If this was really a efficient functioning market, it would stop not at 400. It would stop at like 398 or 407. But it just shows you psychology. People like to say, hey, if it gets to 400, I'll buy or I'll sell. Nice round level. Now, this is seller's remorse manifested in a different way. Okay. People sold at the bottom, and when the price goes higher, they regret selling, and they say, if it ever gets back to my level, I'm going to buy my shares back. So not only can seller's remorse turn resistance into support, it can also keep support intact for an extended period of time. And that's what's happened here. So considering the move lower we had, not surprising that we're taking a little bit of a breather. I think we get maybe a little bit of a bounce, but my suspicion is that there's so many reasons to be bearish, and the action in this part of the market is so weak. My guess is that this support breaks and we go lower. So I'm going to jump over now. Well, I know everyone wants to look at NVIDIA, so let's just see what that happened today. Yeah, I mean, kind of the same thing. Massive sell-off on Friday. Little bit of a rebound today, but it's such a small move that, I think the downtrend continues. Here's the thing, right? It's like everyone's like, oh, AI this, AI that. It's got this earnings. It's going to own the market, blah, blah, blah. Well, markets don't really care about stuff like that. I mean, I guess maybe in the long run they do, but as traders in the short term, I don't care if the thing has the greatest mouse. Maybe they're using AI to create the better mousetrap or to build a better, whatever the expression is, build a better mousetrap. Yeah. Who the hell knows? When everyone who wants to own NVIDIA owns it and has bought it, the market runs out of buyers. And not just NVIDIA, I mean, any stock, any market, crypto, commodity. When the market runs out of buyers, the only place it can go is down. Right? Famous story, Joe Kennedy, the John F. Kennedy's father, was a stock market person back in the 20s on his way to work, got a shoe shine. The shoe shine boy started giving him stock tips. He went to work, he sells everything, and then he goes short, then the market crashes. What happened? Well, he knew that, oh, hey, people like shoe shine boys who don't typically buy stocks or buying stocks, they're the last in the line. They're the last in the food chain. There's no one left to push the price higher. I had a plumber here in my house because I had a leaky pipe in December of 21, right at the end of the market, like right in between Christmas and New Year's. And he saw my screens and he's like, oh, are you a day trader? And he started telling me how one of his friends who was a plumber and the other one was an HVAC guy had left their jobs to go become day traders. Now, that was the very, 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 very peak of that market. All right. No offense to those guys. I'm sure they're hardworking young guys, but bottom line is same thing 100 years later after Joe Kennedy, when people who don't typically buy stocks, like plumbers and HVAC people, are buying stocks, there's no one left afterwards to push the price higher. Prices can only go higher if there are buyers outbidding each other, trying to get ahead of each other, paying higher prices. When everyone who wants to buy buys, only way it can go is down. So next thing we want to just really take a look at here is the healthcare sector. Okay, this is also toying with kind of important support here. So financial sector testing support, healthcare sector testing support. In terms of weighting, that's about 42 or 43% of the market. The financials, which is the second biggest sector, may be moving a little bit higher here. But if we get a reversal here, now this looks bigger than it is. This black line is 40.60 and it's trading at 40.86. So it's only 25 cents higher. So when you look at charts, you got to just kind of keep in mind the scale. It may look like it's breaking out, but it's really not. All right, so that's what we got to watch, everyone. Real important what's going to happen over here in the financials. Because if the financials reverse and tech and healthcare start breaking those support levels, we're going to get a pretty decent move lower. And my guess is that's what happens. Back to the SPY here. Just watch this psychologically important $500 level. Got above it, but came right below it. So even though we were up a little bit today, I mean, it's a fairly good move, but it's not enough to make me think anything has kind of changed. And I'm still bearish. Okay, thanks, everyone. I'll see you soon.